Greetings, Jedi traders. David here of TradingFibs.com to bring you the state of the indices and weekly recap and outlook for October 5th, 2015. Today is October 9th. Market is closed. Let's dive right into the charts, but as always, please seek financial advising when trading with your money, as these videos are for educational purposes only. Support your knowledge in the market, see what's going through my head on any given day or week. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Let's jump right into the volume profile. Volume profile seen here on the chart in front of you for the Russell. Let's go ahead and expand that for the week. Market action, as you can see, this week, nice move to the upside, leaving an open gap down below. We'll see here in a minute. Monday, Tuesday, Wednesday, Thursday, and Friday. Price action closing out former points of control. That's right, using the volume profile as daily gaps as well. The market takes care of previous business and closes out, finds support, as we can see here. Opening up from Friday's price action. It was Monday, Tuesday, Wednesday, leading into FOMC minutes on Thursday. And then Friday, pretty much a lackluster day. Market just doesn't know what to do with itself, seems. So, leaving up open from last Friday, Monday, Tuesday, Wednesday. Closing open points of control. Closing out yesterday's point of control and today's limited action on the Russell. Here we go. Closing out a former point of control. Do we have points of control upside and below? Yes, we do. Unfinished business below, unfinished business above. Let's jump right into the YM. Here we have YM profile. As you can see, market action for the end of September was pretty much flat at the bottom, giving a little bit of a rally rise here. That's right. Rally rise, closing out a point of control here, but leaving plenty of open business down, still bound below. Limited action on price action today. As you can see here, we pretty much closed out that point of control and settling around that level, 16,980. Not too far off. Let's jump right into the volume profile on the NQ. As we can see here, price action again pretty much sideways for the entire week. Nothing to write home about. Lifting up today, not much range action. Just like the other three indices, price action not able to close out that point of control above, but 1, 2, 3 each day's previous Monday, Tuesday, and Wednesday, closing those out, leaving some major open points of control down below. Yes, market action getting a nice rally. See how we put this all together, but even with nice rallies, there is unfinished business below. So when the market is ready, it will come down. So the higher we rise, the harder we fall. Let's take a look at the volume profile on the ES. Again, similar picture. Nice movement to the upside this week, rallying to the upside. Price action limited today. Open point of control still open from previous weeks, including Friday's open point of control here. So that's the volume profile. Again, looking at volume profile as a representation of how much volume was traded at a particular price versus time, as we see here on the market profile. Again, similar pictures as we see opening price action here on Friday. We closed out at 1112.1. We go ahead and now change that. We thought we might get that closed out. We now change that to a turquoise to show a former week daily gap. So we got two daily gaps down below, including open points of control. We took care of some wonderful, these dashed lines here, former points of control, daily gaps, points of control, naked teapox here, blue lines, closing those out. But again, as price action moves higher, where do those daily gaps remain? Well, we got one up at 1279.6, but yet we sit here at 1128.5. And so we go ahead, and because we didn't close that out from this previous week, we also change that to a turquoise color, and we go ahead and remove some of the current weekly daily gaps that were closed out. So again, same picture. We not only do we have volume points of control down below, we also have TPOCs. We also have daily gaps that are open above and below. So when the market will change trend, as we will see here on the long-term charts, we know that we can expect price action to come back downside. The weekly opening price here at 11.20 and really never looking back as FOMC minutes came out on Thursday with actually no different results than what we had from the announcement just last week. Weekly opening price here on the YM 16,542, 16,491. Excuse me, closing out 1, 2, 3, 4, 5 daily gaps this week. Here the daily gap from last Friday still open. We go ahead and change that to a turquoise to know that that is a former week's a daily gap. Here we still have 15,726. That's right, 15,726. We will eventually go get that, Jedi traders. For now, still remains to the downside with nothing to the upside. So a little bit more price action still to come. Eventually downside, hitting these key levels. When that happens, I can't tell you. All I can tell you is they exist. Moving into market profile on the NQ, here we go. Open gap here, almost closing that out during the week, 42.62.50. Oh, by a tick it was that day on the NQ, but we never closed it out. So we keep that open, and price action again doing some wonderful business up above this week, closing out each previous day's gap, including some former day gaps. So this will be very clear. But we still have some room below. Yeah, NQ, I've been saying this for weeks. That's right, 39.97.50 all the way downside. That's right. Mark it on your calendar somewhere. 39.97.50 calendars, charts, whatever you have to do sometime. Hey, that could be next year as far as I know. It could be in a year from now or 2 years. But eventually we will come down and get 39.97.50. So we trade the trend that's in now. And eventually when we come back down, we'll know that we are chasing that level. And finally, to wrap up the market profile here on the ES, we see price action with some open points of control. And that's right, Friday's daily gap now open 1943, including a level down here 1874. Boy, we were so close to hitting that last gap, but we just ran with it. Upside 1874.75 is where that ES will eventually come back down to. That's right, mark my word, 1874.75. But hey, price action right now, closing out daily gaps, points of control. All these lines now have been taken care of. Finished business. Upside, do we have any daily gaps? Nope, nothing to the upside. So as the market rallies, unfortunately, we're leaving some lines down below. But hey, that's what the market does. It leaves lines down below and eventually comes back and takes care of it. Let's jump into the long-term picture and show how we use that on the intraday picture here. Let's jump into the first three charts here on the left-hand side, representing the more swing trade, which represent and support the intraday. So here are our daily charts here, these four on the right hand side in the middle, and the swing, a little bit bigger picture, not as long as the daily, weekly. So what do we have here? We have the 100 tick 240 minute on a T3 moving average and a 4-hour chart. What does this tell me here? Well, I go ahead and I look, I see T3 moving averages with the 534 crossover indicating, that's right, long trend there. We see a 4-hour chart on T3 upside, and that's right, the crossover here. So 3 charts out of the 3 here. So 3 out of the 6. So we got a 50-50 split. I think you're going to see that pretty much trend across the line of all 4 major indices here, is that we got a 50-50 split. So big time, long time, big picture to the downside is still, that's right, still in a downtrend. We just coming up to the 50 period moving average here, but on the intraday pick, on a 4-hour chart, we see price action now on the breaking upside. This is the daily, this is the 4-hour chart, breaking upside the 51.44. So this lends into the more intraday green power to the upside, and that has been represented by that rally that we saw this week. Again, swing meaning, you know, hey, 2-3 days, pretty much represented by this week. So as the price action lifted this week, it only made the intraday day trade to the upside that much stronger. And how do we use that? Well, we'll go ahead and show that to you on the ES today. But looking at Fibonacci retracements, this fib extension, pretty much almost, I'm going to remove that at this point. Not much, we're not really moving down. We continue to rally upside. So the best scenario or best levels that we can appreciate right now is the price action moving up. This is our 50% Fibonacci line right up here at about 1172.4, 61.8 will be up here, 1196.7. We're finding a little bit of price action hanging around the 50 period moving average. There's that daily gap that we were talking about right there from last Friday's price action. Yeah, that big hole needs to be filled, and it will eventually get filled, mark my word. October 2014 low down here at 1038.8. Remember, as you have the bigger picture here, you line it up again with your volume profile, knowing you have VPOCs, naked VPOCs down below. You take a look at your market profile where you have naked TPOCs down below. You take a look at your long-term picture and you say, all right, market's rallying up. All right, we're not going downside to get those levels now. So what levels do I have upside? You can use those as points of reference. We'll go ahead and show you the intraday setup that is supported by the long-term picture. So again, three pictures here on the left representing the swing size levels. In other words, swing size trends where price action is pretty much showing to the upside and still long term to the downside. Yeah, when I have 5 out of 6 or 6 out of 6 all in one direction, how powerful is that? That's pretty powerful when you know that you're in trend. Long-term YM, I think, like I said, you're going to find the same picture, 100-tick range chart, T3 crossover on the 4-hour, 51.44 here in the lower left-hand corner, all representing swing size to the upside for the week, swing size trends. We're back up at 61.8, and we've actually broken up above, so that's right. We got to go ahead and erase that Fibonacci retracement, and we're going to go ahead and eventually I have to draw a new line to see some new levels as the YM absolutely ripped upside this week, breaking the 50 period moving average. Perhaps a run towards the 200. Who knows? But here we are daily. Look at that, crossing above the 50. So I'll give that, not a full half. I'll give it a half once it crosses upside above the 144. So I'll give it a quarter. So, here we got 3 charts, 3 1/4 out of 6. Well, we're getting there almost at 50%. Notice the Fibonacci extension support here as both on the weekly and the monthly. So here we go, almost back in mid-August, we have found support at about the 16,000 level, and price action absolutely ripping up to the upside, which supported that move to the upside this week, as we saw on the volume and market profile. Long-term NQ, same picture. We got 3 in the green. Price action, there it is, breaks on 43. That's right. Could have marked that on your chart today. Price action to the upside here to the 144. I'll give that a quarter of a point, so 3 1/4 out of the 6 charts here. Again, monthly and weekly still remains downside, but look at that, right up to the 200 period moving average tagged today, and that might be the line, guys. I don't know. We'll have to see what happens next week, but absolutely Fibonacci retracement 61.8 right up here. It will be a line in the sand to see if we breach that above or we continue lower. All right, taking a look at long-term ES, similar picture to the upside in the green, upside to the green. Took a little bit of a chop here yesterday, but we were upside from almost the beginning of the week. As price action now getting back up to that 61.8. Sorry there, Jedi traders. I know it's right on the line, but we're going to have to draw ourselves some new Fibonacci retracement lines, and trend appears to be, for the short term, changing direction right now. But take a look. Here we go. Intraday swing trades levels for the couple days here. We got on the left hand side, we got upside, upside, upside. It gives us 3 charts in the green. Here we're still in the red, but I'll give that a quarter of a point, so 3 1/4 out of 6. We continue to move upside. You put that together in a calculation, and you got 3.25, and you divide that by 6, and you have yourself your calculation for the odds, which gives you 3.25 divided by 6. It gives you a 54% chance that we are back to the upside. So again, that's over 50%. Yeah, I was calculating that. Give me a break here. I wanted to get that number correct for you. So 54% to the upside now, which isn't the greatest of odds. It's pretty much a 50-50 split. So how do we use that? How do we use in the daily trading room, how do we use these statistics or these levels or this trend to help us with our intraday trade? So let's take a look at the ES. We'll take a look at an example of the ES. Let's jump over to the volume profile. We got the volume profile of the ES. We know we got volume, a naked VPOCs below. We know we had them upside too as well. All right, this week we managed to close out each day's level plus some former levels. Let's jump to the market profile. The market profile for the ES, same picture. We had daily gaps upside. So those were lines of contention that eventually might have been closed out with a weekly opening price here at 1957. All right, we know the long-term picture on the ES starting from the beginning of the week was in the green. All right, we started out the week, the beginning of the week being October 5th. Here we were already in the green. All right, we were already in the green over here on the 4-hour chart. All right, upside from Friday, that rally on Friday still continuing on. And we also, price action here on the 4th, all right, beginning of the week, October 4th, which, was Sunday's open. So October 5th, we were already rallying. Price action was above the 50 and the 144, even though we didn't cross for another day. So the probability and the odds that price action was going to continue upside was in the 3 charts right here versus the long-term picture was still downside. Again, price action had this is a daily picture, we were just coming up to the 50. So who knows, we might have gotten price rejection there, but we didn't. So again, we would have still considered this downside, downside, downside. So we had at the time of the week 2.5 charts, 2.5 charts to 6 charts. They didn't give me the greatest of odds to the upside, which is 2.5 to 6 charts is a 37.5% upside probability. But opening gap up, and then what we do is throughout the week as price action continued to the upside in the green, we started to look for intraday trends. Intraday, this is our swing level. In other words, taking a look at 2-3 days versus the bigger picture, the daily and the weeklies, and then taking a look here, what would we find on an ES intraday? And represented by the 4 charts here. Again, this is our typical trading platform where we have our market profiles, our AD lines, tick charts, our 5144 representing the overnight high and low, as well as the 5-minute chart with our key levels here. But it is this key chart right here represented by the T3 moving average crossover, indicated by the color background here, signified by the buy signal crossover is the entry to the upside. So if we go back here, again, this here being on the date here being on the, let me see what date this is. Give me a second here. On 10/8. All right, so we go to 10/8. All right, go back to 10/8. We're just breaking up right back above. The 4-hour chart is just breaking right back above. At the end of the day, we already have the 50 above the 144. So trend is to the upside. So the multi-day or the 100 tick of the 4-hour chart giving a slight bias to the green. And then when we have the 50 144 represented by the bar on the bottom here in the green. We have the 20 tick range chart here represented by the green. We have the 5 above 34, and we take a look at an entry here that has a buy signal crossover, meaning the 2 are lined up together. All right, and we see all 4 in the green. This has the higher probability of a successful trade. And then the next question is what keeps you in the trade? Well, the fact that they're all green, and I don't have a single candle turnaround yet, all right, is the momentum to enter into the trade here. Now, depending on where your stop is it is it 1 tick below the entry bar? Are you comfortable keeping it at the swing size? That is all based on each person's comfortable trading level. But either way, the mindset is, okay, 100 tick range chart is in the green. I got the 4-hour charts are in the green, even though I know the daily's in the red, but here I got 4 charts in the green, and here I go. I got a trade to the upside. Gives me a higher probability to remain in the trade and gain some ticks here from about 1993 all the way up here to 1999. Wonderful run, all right. You decide to come out perhaps here, and then you take the re-entry right up here, and you ride it up, all right. And there's another re-entry. Now, The ultimate is to be able to, that's right, is to stay in this trade all the way up from here to here. Well, if I know my 50 is above my 144, I know the tick is upside, I know the 5 is above the 34, I just simply use this as an opportunity. All right, I just simply use this as an opportunity to put my stop down here once price action comes down here, and I manage it on the way up. Just another way of managing a trade. Everybody comes with different comfortable levels of trade management, but the whole idea is, where's the confirmed trend? Wait, we had a confirmed trend back here that actually turned back down, perhaps took your stop out with a re-entry here. So several opportunities. Again, this was back on the 8th, which was yesterday. Wonderful opportunity, even though today was pretty much very choppy, very difficult trading on some of the entries being stopped out perhaps, but on a nice trending day, this is the possibility when you combine it with the long-term picture. So to wrap things up, long-term picture right now, we're at a 50-50 all across the board. Long-term YM, long-term NQ, long-term ES. That's right, breaking some of those Fibonacci retracements. Again, watch for those market profiles, knowing that we have naked VPOCs both above and below, with daily gaps as well, still remaining below. As we cruise into next week, let's take a look at the economic calendar. Columbus Day holiday on Monday. Stock market will be open, banks closed, with numerous Fed speakers up throughout the week. Nothing that stands out in the way like GDP, but we do have consumer sentiment on Friday, PPI on Wednesday. So looking at the Red Star events might be able to move the market just slightly. Always looking for the petroleum status report to move the charts a little bit. Also, please make sure you check out some of the other websites. For instance, if you're interested in Heiken Ashi candles, putting out a weekly newsletter, Heiken Ashi Trend newsletter by the folks at EducoFin, do some great work. As you can see, scroll through the newsletter here, coming up with their big picture on the Heiken Ashi bars and the weekly charts. You can be a subscriber there. It's free. Again, EducoFin. Check them out. I love to get their newsletters, support some of the ideas that I have on my big picture. Always, if you're watching the market indices, always good to catch the Shadow Trader. Go ahead to his website here, Shadow Trader Video Weeklies. You can go ahead and get those on Sunday. You get the market commentary also from the folks at ICE Exchange, from the U.S. Equity markets, watching their videos. Check out the IBD TV, another great resource for you when it comes to potential opportunities for long-term holdings in which you can use the same strategy. I also would like to recommend another website that I didn't have up here, jasonkelly.com, which also does some great work when it comes to long-term holdings. Here we can see Jason Kelly and his 3-sig signal, which looks at particular market ETFs and long-term holdings, more based on value, but combine that with the T3 moving average and the longer-term buy signal trend on the moving averages. A great thing to put together. You know, the technicals with the fundamentals, pretty basic there. So Kelly letter, very based in the fundamentals, combined with the T3 moving average and others that I have on my charts, makes for some long-term holdings to keep myself in the trend. And as always, you can always check out my website for the trading rules. Check out the weekly recaps that you see here, including some of the free Thursdays or free Fridays. They have a live trading room. Again, you can check out the resources here, e-manual, trading room, trading rules with some of the ideas that we use every day in our live trading room. All right, that concludes today's and this week's insight into the state of the indices. Hope I gave you enough information for the weekend and the week to come. Feel free to stop by at tradingfibs.com or email me at david@tradingfibs. Contact me through any of my social media outlets to obtain more information. My mantra is to, hey, one simple strategy, any market, any chart, any time frame, even though I particularly enjoy the range chart, more based on price versus time. Will keep you disciplined. You can find me every day on Twitter at TradingFibs, TradingFibz, as spelled out right here. And as always, I usually leave the crystal ball to the experts. Some of the traders in the room, I'd say they were my crystal ball experts. I usually only trade what's in front of me and on my charts. Hey guys, have yourself a Blue Zone day, and good night, and good trading.